Well, we are here. We're in Appleton today. TVFCU Mortgage Moment. You never know where they're going to take us. We're here. They are building some new homes around us. Brian Fryer is here talking about construction loans. Brian, thanks for being with us today.
Thanks for having me today. A beautiful day to be here.
It is. It's a perfect day. Couldn't have asked for better.
Yep.
So let's start with what is the difference between construction loan and maybe a typical mortgage loan that we might get from TVFCU?
Well, a typical mortgage loan, this is with TVFCU or any lender you're going to do. Once you close on the loan, those funds are there. They're there for you. If you're purchasing a home, purchasing land or something like that, or if you're doing a refinance, those funds are available. You buy the home, refinance or anything like that, funds are available. On a construction loan, it doesn't come as a lump sum because you're doing the loan in phases of the construction, whether it be for a major new construction or a major renovation to a home. Either way, on a construction loan, it's going to be in phases.
Gotcha. Okay, so we use it little by little instead of all at once.
Little by little.
Gotcha. Okay, perfect. And so when it comes to dispersing the construction loan, what does that look like?
Comes in your plans with your builder.
Okay.
They're going to set aside certain things that milestones or goals, and that's when the funds will be dispersed. And it start out with clearing the land, doing the foundation. That might be your first disbursement. Then the framing will be your second disbursement, on and on to the roofing, to the interior. And generally, most of your construction loans are about 12 months, so you should have maybe, it depends on the builder and your plans. They may have 12 disbursements. They could only have 6. We had one time, you only did 1 disbursement.
There you go. So and then you get to move in and you've got a new home and it's lovely.
Correct.
I love it. I love it. So let's talk typical terms and interest rates for construction loans.
Yeah, construction loans generally are going to be a temporary loan, generally 12 months. Can go longer. Sometimes builds take a little bit longer than 12 months. Your lender, TVFCU, will work with you on that if it's going to be longer. But over 12 months is the typical time period. And again, it is temporary. Rates on those are going to be, with us, you can lock it in at the beginning of the phase of it. And then when you finish the home, it will flip over into your permanent financing. And that's called a construction to permanent loan, which is what TVFCU does. It's a one-time close. You close in the beginning before you start construction, which that's another big thing. You don't want to do anything to the property until your loan is closed. Gotcha. It's a big, big thing a lot of people make a mistake on.
Now, speaking of some things people need to keep in mind, accidents or things they might do before they're supposed to, what are some of those essential things we need to keep in mind?
Well, that goes to your plans, and that always works in the beginning. And I always tell everybody, if you're thinking about doing a construction loan, it is a long process. Just because you're going to be vetting builders, you're going to be looking at plans, you're going to be looking at land if you don't already own the land, and you're going to be talking to them about what you want to do, what you want to put in the home. I generally tell everybody you're looking at least 60 to 90 days even before you get to the phase of starting the loan process.
Okay.
Because there's a lot that goes into it, talking to your builder once you do find a builder. Getting those plans, blueprints ready, materials lists, the contract and everything. And you'll want to work closely with your lender, TVFCU, if you're using us for your construction loan, to make those plans. So it's a process. It does take a little while, but once you get everything ready, we start the loan process. That's like a normal loan, about 30 days. From beginning of the loan process to close, about 30 days. After that, that's when you can break ground. Again, it's very important for our listeners to know, if you are looking at doing construction loan, do not do anything with the land or property until after the loan is closed. Very, very important, because there can be title issues and stuff like that.
Gotcha.
Do anything to land.
So pack your patience.
Yes,
pack
please
your
do.
patience.
Pack your patience, work with your lender, good communication, very important.
Yes, and then we touched on it a little bit, but what are some common mistakes or pitfalls people might fall into when it comes to construction loans? Yeah,
some of the big mistakes is overruns, overages. Make sure, and that's in the planning phase right there. You want to make sure you have money set aside too, because most of your lenders in construction loans, they're going to have you set aside reserves in case you do have overages. Everybody knows with inflation right now, material costs can change month to month, year to year. Sometimes it can change week to week too. So that's very important when you're talking to your builder. Have that built into your contract. You know, they're going to give you a price range on cabinets, on flooring, on paint, on roof, anything like that. Try to stay within that budget as much as you can. Work with your builder. Be honest with them what you're wanting to do. Very, very important in that beginning crucial planning phase, that you're realistic. People say, you know, I'm going to save a whole lot of money by building a house. Sometimes that's not exactly true. You do get to build what you want a lot of times within a budget. It's all about budgeting and saving some money aside that you might need just in case you go over budget during, and this is after the loan closes.
Okay.
Things can change. You may have something you want to put in, it's not going to fit, it's not going to be right. You might have to buy something more expensive. It might cost you a few extra $100 or $1,000. So
Yeah.
be prepared for that just in case.
Absolutely. My parents are going through they're redoing the whole downstairs of their house.
Oh,
And
yes.
so hearing their stories, it's that exactly. My mom is a budgeter and she has planned. So
Yep.
you definitely want to get your Excel sheets out, or obviously work with TVFCU and they can help you do it all.
Yeah.
And Brian, if we want more information, we want to get you guys as our construction loan people, where do we go for all that information?
423-634-3600 is our number, TVFCU. Ask to talk to a mortgage originator about a construction loan, or you can reach us at tvfcu.com.